Alright guys, so this is your apocalyptic update and let's talk about survival today. The sell-off in the global markets, they're getting worse. Throughout last week, we talked about how the world economy is under tremendous pressure. And as the market collapses, the smart move is to have a plan to scoop up assets at a discount. And here's what I'll be buying in 2025. This is my game plan. But we have to set up the macro picture first because the risk of a big correction, well, it's escalating fast. Inflation worries are starting to rebound, and as a result, interest rates will be staying much higher for longer. Major banks are also predicting the worst. Bank of America has scrapped their rate cut forecast. In fact, they believe rate hikes are actually on the table. If core inflation rises above 3%, the Fed could actually lift interest rates higher. So the Fed funds would stay well above the 4% level in 2025. And this is a very major issue. We already have a ton of black swans circling the US economy and the world, and all of them are interest rate sensitive, especially towards US rates. The commercial real estate crisis is going to get worse. Global currencies crashing against the dollar isn't over, and borrowing costs within the US, they are heading up fast. The 10-year yield rising poses the biggest problem to the US and the world, and it's heading up to 5%. The cost of money is going to get real expensive. Everything from mortgage loans to credit card payments will stay high or even skyrocket. And what does this do? This makes people go broke. Now, if all your income and your savings are used to make those monthly payments, can you even afford to go shopping? So, domestic consumption is under pressure as well. Now, I don't want to be all doom and gloom because even though the financial system is collapsing, the end game is still inflationary. The bubble economy we are in might deflate, but it will reinflate once again. So if asset prices implode today, 5 or 10 years down the road, chances are it will be higher than ever. And let's take the S&P for example. The long-term trajectory is up. Now there have been brutal crashes that range from 25% to over 50%. But those almost always precede an incredible bull run that sends asset prices soaring. For example, a bear market could last for 12 months with a drop of 34%, while a bull market can last over 4 years with an average return of 150%. And this is good news because if you have a long enough time horizon, you'll win out in the end. The US government would eventually bail out the system and the economy. Now, I can't tell you what to buy or sell, but this is my personal game plan here. The different assets I'll be accumulating as the markets collapse. So if prices fall by 5%, I'll buy more. If they fall again by 10%, I'll be buying even more. Because the biggest enemy will still be inflation. That isn't going to end. Now, the first asset I'll be buying is gold. It's something that I've been accumulating since 2009 and it has served me very well. Now, over the last 12 months, gold has risen by nearly 31%. In 5 years, it's up by 74%. And over 20 years, it has increased over fivefold. And that's an annual compounded return of around 10% annually. It's on par with the S&P long term as well. However, gold has been appreciating faster than before, and we have to understand why. Even though rates have been rising in 2023 and 2024, prices have been going up. And it can be confusing to many people why. Now, shouldn't higher rates crush the price of gold? Now, not always, especially when we are in an era of endless borrowing and endless spending by the US government. And let's explain this as simply as possible. The US national debt has gone well above $36 trillion today. Even this chart can't really keep up with the rate of borrowing from Congress. Since 2020, the government has borrowed and spent $12 trillion into the economy. And how efficient is US public spending? There's a lot of wastage happening here. So a lot of money is flowing into the hands of the few. The supply of goods isn't catching up. And that's why inflation ran wild over the past few years. And it's not really that gold is getting more valuable. How could it? It's just a rare piece of yellow metal. It's the dollars in your pocket that's losing more and more value. Now, besides government spending, there's also a wave of global diversification happening. Central banks all over the world, they are sick and tired of US debt. Now, for one, Congress will never stop spending. Secondly, your holdings of US bonds can always get confiscated. Just look at what happened to Russia's frozen reserves. And we can all see the economic sanctions slap on China. You might not be on the sanctions list today, but you're always on the menu. Because of this, gold demand is becoming independent of interest rates. Now, this chart from Goldman Sachs confirms this shift in trend. Before the war, gold was very dependent on lower rates to rise, but the G7 changed everything. The moment they froze the Russian reserves, the biggest buyer of gold became central banks, and they kept buying gold bullion no matter the price. Gold rose by $100, they bought more. It rose again another $200. They shunned US bonds to buy even more bullion. And that's why gold is one of my top assets going forward. The world is getting even more chaotic and global spending, well, it isn't going to stop. But let's talk about the second asset I'm buying, and for most people in the world, when you say stocks, it immediately defaults to the S&P 500. The US stock market is the most popular index that everyone buys into. Now, I personally own shares in the S&P as well, and over the past year, US stocks have returned an incredible 23%. But in 2025, I'm going to readjust the strategy. There are just too many unknowns coming this year, and the biggest threat is Trump's trade war on the world. Remember, he's not just out to clobber China. Trump is out to punish the world with a trade war. And just in case you forget, here is his latest message.
We'll impose new tariffs so that the products on our stores will once again be stamped with those beautiful words, made in the USA.
But here's the problem. Just because the US wants to reshore production and tariff the world doesn't mean it would work. Even Canada is thinking of a trade retaliation. They imported over 300 billion of US goods last year. The Canadians would hit back on US imports they buy by raising their own wall of tariffs. Now take this situation and extrapolate it to the rest of the world, and we can be quite sure that China and the rest of BRICS would retaliate as well. Trump could throw US exports into a tailspin. We could enter a scenario where the US economy enters a recession because the world shuns America. And this risk is starting to grow bigger every single day. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. And that's why I'm not betting solely on the US markets. My preferred equity investment of choice is the world index. Buying just US equities alone presents an enormous risk, at least to me. Now, the world index of VT covers over 9,000 investable stocks in the world. It includes the US, EU, China, and Asia, almost everything under the sun. And in terms of performance, it's not too shabby as well. It aligns with my philosophy of survive and advance, especially when we have no idea how this trade war will play out. The world index returns nearly 10% annually over the past 10 years, and since the fund started in 2008, annual returns are over 7.6%. Yes, the returns are lower than the S&P, but that's the trade-off. So you have to decide for yourself. Sure, if the US somehow wins the trade war, which I doubt, and everyone bows down to Trump, then the S&P will outperform the world again. But consider the alternative here, guys. What if the world decouples from the US market and moves closer to BRICS or China? And in that multiverse, international stocks could outperform the US? I've no idea, and that's why VT is a happy medium for me. Trump could go all the way and punish the world, which could ruin the American economy. And there's also another reason why I'm avoiding going 100% US stocks only. And it all has to do with overvaluation. The S&P is incredibly expensive today. Just look at the PE ratios. Price to earnings today is out of whack, and that means you are paying a lot of money for US companies today. The 10-year average is around 18, and we are above 24 today, heading back to the extreme levels of 2020. And can this run up continue? Sure, it can, but realize how volatile the situation is in 2025. If things backfire for Trump, the US markets could fall much harder than we all expect. And let's talk about the last asset I'm getting, and this will be a little surprising, but in 2025, I'm buying more short-term US bonds, specifically money market funds. And here's why. It all has to do with hedging against a potential market collapse, plus a stronger US dollar. Now, short-term treasuries today yield around 4.3%, which isn't too bad considering risk assets like stocks could collapse further. Plus, the Federal Reserve might not even cut at all in 2025, so the returns here won't drop. Would I lend the US government money for 2 years, 5 years, or 10 years? No, I would not, because inflation could get worse down the road. But for 3 to 6 months, buying short term bonds makes sense for me. The biggest risk I see is the US dollar going up, because when it does, all sorts of problems start to happen. And if rate cuts don't come, or if we get a hike, global currencies will collapse and the dollar will soar even higher. And here's what happened last week. The moment the markets realized the Fed won't budge, the dollar exploded up while other currencies fell hard. This move could get worse over the next few months or even years. So buying some bonds is a hedge if we do get a catastrophic market collapse as the dollar rises higher. Then I'll sell off my bonds to buy even more stocks and gold. And I want to repeat that I have no idea how things could play out in the short term. But if Trump goes pedal to the metal with his tariffs, the flow of dollars could be affected. These are America's most important export markets. US companies exported over $400 billion worth of goods into Canada, $360 billion to Mexico, and nearly $200 billion to China. If the world counter tariffs the US, over $1 trillion could get affected, and that would result in fewer US currency being sent out to the world. So while the US might suffer from higher prices, the world could be hit with a dollar shortage, and that sends the dollar index higher and other currencies down. Will this certainly happen? I have no idea, but this is a clear and present danger and we can't ignore it. Now, a big question I get is why not short the markets? Why not emulate Michael Burry and bet on a collapse? Why don't do your own big shot? Because you can't time the market, and trying to time a collapse is extremely difficult unless you have very deep pockets. And if your timing is off, you are essentially screwed, and here's why. The 2020 crash was brutal. The markets collapsed by over 30% in just 3 months. However, by July 2020, the markets recovered to the pre-crash levels. The collapse ended because governments all around the world bailed out the economy. The US government itself printed more than $4 trillion in 2020 to reverse the crash. We have no idea how long or how short the coming collapse will be. Trump could very well bail out the economy if we get a recession. The Federal Reserve could buy trillions of bonds once again to prop everything up within months. And that's why I'm not shorting the markets. So this is my investment game plan for 2025. Asset prices in the long term would continue to go up. But there's a serious risk of a massive correction this year. Higher rates are a big threat to the system, so playing it a little safe isn't the worst idea. Secondly, there's also the risk of the US losing economic dominance. The trade tariffs could backfire in ways that would surprise us. US growth could lag behind the rest of the world. But let me know what you think. What's your game plan for 2025? Will the US outperform the world again, or will it crash hard? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.